Chris Conway from the Australian Stock Report, live in our Melbourne studio. Chris, welcome. Bracing for a jobs print that could indeed prove slightly problematic, just given some new components in the release to unsettle. We didn't need that occurring this month of all months.
No, we certainly don't, Carson. I think the problems that you're talking about with the jobs numbers is the fact that the New Start program will see some 35 to perhaps 40,000 new job seekers factored into those numbers. So we could see the unemployment rate jump from 6.3 to 6.5%. Won't be a good look, but look, I mean, the government has done the right thing in trying to help these people find work. So if the number does rise, I think investors and traders need to take the numbers with a grain of salt and be aware that there's been a slight change in the metrics in terms of the calculation of those numbers. But yeah, on initial face value, it won't be a good read if it jumps higher. And
you'd agree, at a moment like this where the volatility can unsettle at every turn, that could potentially just be game over story for at least the market today, and any will to rise, just forget it.
Yeah, well, I think we're already cooked anyway in that regard. I don't think there's going to be any light at the end of today's trading session. We'll either stay on the lows where we are now, or we could even head lower, like you say, if that number is not received well. But yeah, look, you're 100% right. Markets are very, very sketchy at the moment. They are really clinging to try and find some stability, some certainty. And just from the technical perspective, if you look across the globe, a lot of markets are at big round numbers at the moment. Australia recently bounced off 5,000. The S&P 500 in the US rejected 2,000 overnight almost perfectly. Hang Seng's at 20,000, DAX at 6,000. FTSE at 6,000, DAX at 10,000. And markets are just waiting for that next piece of news, and the big news that they're all waiting for is obviously the Fed, and wait to see what happens there. So market's certainly at a tipping point, our market at a tipping point, and you're 100% right. If that number's not received well, yeah, it could get even uglier than it already is, if that's even possible.
Okay, well, the ugliness would, as it were, crystallise in what kind of a figure? Realistically now, a market figure that you would be saying could be one to watch and maybe even breached on the downside? That's to say,
yeah, look, I certainly think we move back to 5,000. I think the rejection, well, today we'll print a sell signal on the market, no two ways about it. That's rejecting some support from back in, I think it was October and December last year, which will now act as resistance around 5150, 5200. That will be rejected. Like I said, I think we move back to 5,000, and by the time we arrive at 5,000, there'll probably be that technical support there, and then we'll almost be into the Fed decision, which is, of course, next week. And then, as I said, you know, markets, global markets indeed will take their cues from there. In terms of what the Fed does, look, I'm going to fence sit on this one. I don't think they will cut rates because of what's happened in China. I think they'll be a little bit circumspect, but by the same token, I wouldn't be surprised if they did, raise rates, that is. And that's because the Fed has said all along that they're going to be data dependent. The US economy numbers are okay. I think where everyone, you know, second guesses the Fed is that it's a departure from what economic theory tells us. Economic theory tells us that we don't raise rates unless a market is, an economy is overheated. I don't think anyone can sit there with a straight face and say the US economy is overheated at the moment. So that's why I think everyone's second guessing the Fed. But in terms of their statements, they have said they will be data dependent, and the data probably supports them raising rates in September. So a 50-50.
Well, yeah, but they're also an inflation-targeting central bank, and there's no scintilla of a red, as it were, flag hoist on that front in that economy.
Exactly right.
So you know, to tighten it and to basically abrogate your mandate, well, they can do what they like to do, can't they? They are the Fed. Chris, back on our market, let's get stock specific. You're liking Bluescope. How much of that liking is down to the détente, the agreement with unions, the end to an annual uncertainty, the ability of this company to punch and plan into the future?
Yeah, look, I mean, I think Bluescope's done a pretty good job moving steel production out of Australia. You know, the big focus now is Port Kembla. They've put forward a couple of plans there. Plan A is to slash $200 million of costs and shed some $500. For the share price, that's probably not the best plan. The best plan would be Plan B, and that's to close altogether. But Bluescope has done pretty well. I mean, I think they've seen this coming over the last 10 years. Most of their steel production is now offshore. I think they've got 14 or 17 plants in other areas around the globe. Their steel production in Australia compromises such a small part of their business, but it is so cost prohibitive to be making steel here. So Yeah, I think either way, whether they go with plan A, the cost cuts, or whether they go with plan B, closing the plan altogether, it's going to be a positive for Bluescope, hence why we like it, and we think the target on that one would be probably $5 initially, but if they shut Port Kembla, I think it might get to $5.20.
Yeah, it struck 578 in Jan of this year. The point being, it's retraced those highs, and it's kind of in the midpoint really between that a heady figure and the yearly low of 270.
Yep.
So, you know, vulnerable in the short term, or you think it will hold the line and not succumb to that lower level?
If you're talking in the context of what global markets do, I think if global markets get smashed, then, you know, obviously Bluescope could head lower, but I think it will still outperform on the expectation of that Port Kembla outcome, like I said, whether it be plan A or plan B. So it probably won't fall by as much as the broader market if the broader market heads lower, and on the back of an outcome, as I said, with Port Kembla, I think it can indeed outperform.
You don't? Okay.
That would be the outlook there.
Into Woolworths, another stock that is not, well, it's a stock actually that's not on your buy list. You're saying what? Give it a wide berth until when? Because there were positive mutterings even this week on a different strategy for Masters, not simply the idea of giving it the flick, but maybe finessing the actual offering, minimising X versus Y to the consumer's benefit.
Yeah, so certainly there was some commentary out yesterday about, as you said, sort of rationalising or changing the offering and focusing on, say, the home improvement or home beautification area of the business in terms of paint and wallpaper and all those sort of things, which is a huge a segment in Australia and probably one that's a bit under-tapped. In terms of the Masters business, it's going to be like turning the Titanic. You know, they could throw even more money at it, and eventually it might turn around. I think the projections for 1 year to 3 years in terms of that particular plan. The other suggestion was that they close the business altogether. Well, if you do that, you hand almost $1 billion worth of revenue and sales to a direct competitor in Bunnings. So either which way that they turn, it's a very troubled business. And even more importantly for Woolworths is that whilst everyone's worried about what's going on with Masters, they're not focusing on their key division, which of course is food and alcohol, which is at the same time getting absolutely smashed by Coles and Aldi. So that's why we think it's a sell. We don't like it. We think it's headed lower. At some point the business will be turned around. Don't get me wrong, Woolworths is a great brand. It's an Australian icon, well, I mean, an American icon turned Australian icon, and it has a great network, so it will find some support somewhere. But yeah, the negative factors at the moment are just too much for us. We're targeting a move into around $22.
Yeah, I mean, and it could be that the new normal might be shadow of former self by dint of offshore entrants now firmly entrenched. Yeah. That could be the mood music to meet that reality into the future. Thanking you, Chris, as always.
Thanks, Carson.
Chris Conway there from our Melbourne studio.